Welcome to Charts This Week. My name is David Linton. I run Updata, and this week's edition for Monday the 18th of April comes to you from London. And we start as always by looking at crude. Crude prices falling very heavily this morning, down 4.5% on Brent. No big surprise there. There was the Doha meeting on the weekend, but many viewers will know we've been pretty bearish on crude for some time. So we know that bad news for the price happens in downtrends. And whilst we have had a little bit of an uptrend in crude over the last few months, we have really come under pressure. The seasonality we talk about often, where we have been saying that this run would be short-lived. So we might be seeing the beginnings of a breakdown here. So if we look at the seasonality, we see here that we're just entering territory around the end of April, where on the seasonality curve, prices will start to fall. This is what happened last year, and we expect much the same to happen this year. So we're probably near a seasonal high for crude at the moment. Prices really coming under pressure again, and we see that here in the cloud chart. Of course, these prices are all coming from your Thomson Reuters icon, just straight off the Thomson Reuters icon screen. Of course, you could look at the charts in Thomson Reuters icon, but the charts and Updata give you same data, just gives you a lot more ability to analyze those prices. And so we see here a big fall off this morning, and normal rule of thumb with technical analysis, of course, is big move down, sideways, another big move down. So this is probably just the beginning of a new short-term downtrend in crude. And if we want to see what the potential downside is, just shift T keys on your Updata system, and there is potential for crude to recover back to these levels, but we'd have to move back above 41.50 on Brent for that to happen. So at the moment, we're under downward pressure. And if we look at WTI, much the same picture, of course. Shift T here, and again, we're hitting the lows this morning. So this morning, very volatile session on that news. And if you are trading crude short term, then the 1 minute chart. Again, this is from Thomson Reuters icon, Shift T. So we can see here that we do have some potential upside targets now off this bottom. To around 42, and we do see here that we have the downward pressure. Change the box size down on the right hand corner here, and we see now we've got 42.25 and 40.08, so targets in both directions. Watch those 1 minute charts for a continued picture on crude. We take a look at US NatGas, back below $2. The seasonality on NatGas is that we do see a little bit of strength in this April, May, June quarter. We are still below the cloud on the daily, so we are in a bearish frame of mind. We'd only really be bullish around above 225, 230. So we've still got a long way to go to turn this sharp bullish. And of course, then we head into the second half of the year where prices tend to fall very dramatically. So at the moment, there is a range. It's around about 180 to 205. That's the current sort of trading range. And that will show up clearly in the 1 minute chart. So sorry, the 60-minute chart. So the shorter term chart. So really range bound. If we break below this 180 level, then that would be bearish, and we break above the 205 level, that would be bullish. That's how technical analysis works. Shift T gives us the trends and targets, and we can see here that we do have a little bit of upside target. The downside targets were met last week, so that's quite interesting. If you're trading NatGas short term, of course, the 1 minute chart, targets on your chart, Shift T, and if we can just break above this 191 level, we do have some respite back to 195. Of course, that's a very short term picture. If we take a look at European gas, quietish this morning. So not following that move on crude, but MVP still in a bearish frame of mind. Here we see we've just been teetering along around this 26 pence per therm mark, and this is the correlation with crude oil, Brent. And what's interesting, of course, is that this chart, so the OTC price is coming either from your Trayport screen or the Updata real-time broker feed, and what we see here is that we're falling back below on the correlation, so negatively correlated with Brent, That means that Brent's falls this morning not having such a big impact on gas prices right now. So still a bearish looking picture, but not reacting to the Brent picture. If we look at the 60-minute chart, again these are all OTC prices in real time. We see here that we are just trying to break above the cloud here, breaking out of this range, but we are pretty range bound here in the mid-20s. Of course, if you're trading European gas, Shift T on these real-time prices will give you the trends and targets. Downside still there. 25, that was put in last month, 23.35 and 25.10. So there's still downward pressure on MBP prices. If you look at TTF, down a little bit more significant this morning, and making new lows below that February low. This is the front month contract, so a pretty bearish picture here. And if we look at the 60-minute chart, we see here that we're again just teetering along. This 11.10 mark is pretty important. Shift T, and we do have downside targets to 11. That downside target was given back in February, and we have 10.11, 10.86 and 11.05, so anywhere between 1 and 10% downside there, so still a lot of downward pressure, and the picture's very similar on NCG and Gaspool. If we take a look at German power, we see here on German power that we are getting a little bit of a recovery. It's from 21 to 23, so it's around 10% recovery in prices in the last couple of months. We are also bullish above the cloud on the 60-minute chart, and have been now for a few weeks, so that's quite bullish for the price. Shift T will give us the trends and targets. 23.80 is the next upside target, but we do have strong resistance from the previous high coming in here, so just be aware of that. And of course, the place to look to if you're trading German power is the 1-minute chart, again off your Trayport screen, or your real-time OTC prices, 23.50, 23.80. So those prices really key. Keep an eye on that, but German power is certainly looking much better than gas. And Nordpool above on the cloud as well, so that's looking quite positive too. If you take a look at Forex, dollar making a little bit of recovery at the moment. The dollar index above the cloud, coming back to test from the other side, support, but that is short term a bit more bullish. The euro here, we're actually above on the cloud as well, so euro is a bit range bound still. This 115, 105 level, that's what we need to see broken ultimately for the euro to trend. And we see here on the 60-minute chart that we have been bearish this last week or so. So we see there very much that we're falling below. And we've got a downside target to 109 here, but we'd need to fall below 112.40 for that to be activated. So still quite a lot of upside targets there for euro, so keep an eye on that. The 1-minute chart we see here for a very short-term view, and if we just change the box size down in this bottom right-hand corner, we see here very range-bound, fairly directionless for the euro dollar at the moment, so hard to call for the week. If we take a look at some other currencies, sterling still below on the daily cloud, just below on the 60 minutes. We're really in this 141, 140 to 143 area. The last few weeks we've been stuck in that zone. Against the euro, staging a little bit of a recovery, having come back against sterling. We saw here how euro was pulling back, having had a very strong time against sterling. So euro just starting to cross into bullish territory again. So sterling looking a little bit weaker. Norwegian krona did get quite a strong rise at the end of last week, up to 940, but that's just pulling back again this morning. The Swiss franc and the euro just pulling back a bit as well, and euro sterling looking in a real downtrend. So Swiss sterling looking in a real downtrend for sterling. So Swiss definitely the stronger currency there. We take a look at stock markets. We start with the S&P 500. Look at the weekly chart. This, of course, has been the big worry. We were below on the lagging line on the cloud. We've just managed to get back above. We really are just sort of slowly starting running out of steam on the weekly here. Just can't break this 2100 level. So this week will be pretty critical. Can we get back above this 2100 level? So at the moment, we do still have a pattern of lower highs and lower lows. So it is, although we've had a recovery, it's how long can this recovery be lived out? We still have the downside targets around 28-29% hanging over us. Those percentages have grown because the price has recovered. We do have quite strong support here, and on the 0.5% chart, really encouraging that this downward target has been negated with this move up. So this will give us a new upside target when that column finishes. We see here we're bullish on the daily, bullish on the 60-minute, and perhaps just for this week, we take a look at the 60-minute chart. There are quite a lot of upward targets here, so lots of thrust targets to the upside, and we are seeing 2150 as an area. If we can break that 2100 level, then we would probably run to 2150 quite quickly. If we look at the NASDAQ, the NASDAQ quite different to the S&P in that we never went negative on the cloud lagging line, so that was positive. And we did actually manage in December to just make slightly higher levels there, so we had a slightly different pattern, and again a higher low. So this is still a pretty bullish looking chart compared to the S&P. We are bullish on the daily, bullish on the 60-minute. No real serious downside targets here to play for either on the 1% chart, and upside targets still very much there. Downside target we do have on the 0.5% chart, sort of consistent with the S&P chart, but we do also have this upside target, and again targets upside of about 2% on the 60-minute chart. So Nasdaq looking a little bit better. If we look at European markets, we start with the FTSE. FTSE is down a little bit this morning. Of course, being heavily oil laden, that will have an effect on FTSE. We're still not above on this weekly chart, so that's still pretty bearish. Above on the daily, above on the 60-minute. 3 downside targets, so it's quite negative for FTSE, although we do have an upside target of around 12% on the 0.5% chart. And the short-term charts, we do have 4% to 1.5% upside potential. So the FTSE climbing a bit of a wall of worry there. If we take a look at the DAX, is also down this morning, even more than the FTSE, so that's pretty key. And we just take a look at the charts here. These are all my tracker charts, of course. So, and you can download these from the libraries in Updata. So this is my weekly, which is bearish. My daily, which is still bearish, but the 60-minute is bullish. Mixed targets here and here. So the DAX is looking more bearish than FTSE. Not such a clear picture, and certainly more bearish than the US. We take a look at Asian markets, because Nikkei got off to a very bad start in April, and we had a better week last week, but down 3.5% today, so we really are falling back again. Nikkei looking pretty bearish. Of course, the earthquake there may be having an effect, and our sympathies to everyone in Japan. But the interesting thing is that we see here that we are bearish on the daily, bearish on the weekly, and just slightly bullish on the 60-minute. Downward pressure here in a clear downtrend, so a pretty bearish looking picture for Japan. If we take a look at the Chinese market, Shanghai, China is still probably one of the big worries. We are just wandering below on this weekly chart. Very few people look at weekly charts, but the weekly chart really does give a very sort of nice, less granular picture, takes out a lot of the noise. We see here we've had a bit of a recovery. This recovery, how long can it be staying for? And of course we do need to get above this high here to have a higher high. And the fact we're wandering through on the lagging line is a little bit worrying on China, and that could be the market that unseats us again. Downward pressure, we're below on the daily, we are above on the 60-minute chart, but downward pressure here of around 50% if we make new lows, so that would be a pretty worrying sign for China. We take a look at the Australian market. It has been another pretty bearish picture here. Probably sort of almost as bearish as Japan. Bearish on the weekly. Actually, it was a bit bullish on the daily and the 60-minute chart. So we are seeing some recovery, but of course, resources and commodities having a big effect on the Australian market. So a hard one to call at the moment. If we can make new highs on this short-term chart, then we do have quite significant upside there of about 12%, but a lot of volatility and a lot of risk. Last of all, we take a look at the Indian market. And the Indian market's still probably the best looking market in Asia, and we see here, although we are below on the weekly, we are above on the daily, above on the 60-minute. We still have an upside target of 66% on India, 18% on this half percent chart, and we don't have much short-term upside. This is the 60-minute chart. We have more and more Updata clients in India looking at this, but the short-term picture is that probably not a lot to play for at the moment, but these longer term targets looking very bullish. That's it for this week. Until next week, happy charting. See you then.